Get to the big news this morning. That's JPMorgan will be adding Indian government bonds to its emerging market index starting June of 2024. To decode this, we're joined by Prasanna, head of Global Markets Group of ICICI Bank, and Lakshmi Iyer, CEO Investment and Strategy at Kotak Alternate Asset Management. Lakshmi, Mr. Prasanna, thank you very much for joining us this morning. Mr. Prasanna, first question is, what's the immediate impact that you see on the Indian bond markets and even on the currency? The currency has been on a depreciating, trend given the strength that we've seen in the dollar index. So do you see that getting arrested?
So I think a lot of whisper was happening over the last week or a month, let me put it, and speculation on expectations of this inclusion to be happening in September. And some flows in the bond markets especially have come in anticipating that. But having said that, I think it's a really, really big deal. And I think in terms of numbers, we could see something like $20 to $30 billion of passive money flow coming in the next year. And in anticipation of that, you can also expect some active flows to happen over the next 6 months or so. So all in all, it's a big development. But I think you will have to strip the impact in terms of what is the short-term impact and the long-term impact, because the short-term impact can be like because of the macro factors being a little bit, not so favorable. It's quite possible that we'll open the bond deals, 10-year bond deals will open in the region of 705 to 707 kind of levels. But after that, whether it sustains or not is something that we need to see depending upon how oil moves and how global bond deals also move. And from a dollar rupee perspective, I think we would see the INR appreciating by around 30-40 paisa at the open. And again, same answer, whether it sustains or not, depending upon how EM Asia moves. But this is just a short-term impact, Latha.
Okay. Now, Prasanna, if you can tell us what numbers we can get, because the press release says, one, that there is a $213 billion that are sitting on this GBI-EM Global Diversified Index. So do we straight away say 10%, so 21 billion we will start getting from June? Is that the way to look at it?
That's right, Latha. So the 10% of 21.3, I mean, the 213 billion can become higher or lower by the time we reach June. Whatever be that number, the India flows will be 10% of that over the 10-month period that the index inclusion is going to happen. That is for sure. And that we call it as passive investors. There are two other things that we need to know about.
There is a JADE index and a local currency index.
No, more than that, I think there is a Barclays World Aggregate Bond Index and there is a FTSE Russell Emerging Market Bond Index. And if inclusion happens in these two indices as well, we could talk about passive money flow of $20 to $30 billion more if these two also come in. And when the last time China got included in the Emerging Market Bond Index of JPMorgan, all the three indices was actually included. So that's one point for you. The other thing is, see, we are now at the end of the day talking about passive flows of nearly $40 to $50 billion if all three indices get included in the FY25 year. But it is quite possible that in anticipation of these flows, the active investors can also chip in and start buying even from today. And actually speaking, like I mentioned at the opening, we have seen in the last 1 month some amount of inflows coming in from FPI in the bond market, which could be to some extent front running of the expectation of the index inclusion. I do feel that, had the macros been much better, I would have more confidently told that inflows will come. I'm sure inflows will come. To what extent it will come is something that we'll have to wait and see.
Okay, but this JADE index and local currency index are not important? I mean, other than the GBI-EM GD? Okay, that's page 2. Okay, let me toss that to Lakshmi. Lakshmi, could you read the entire press release? Because there seem to be other indexes also called the JADE index and emerging market local currency index. So what would your math be? Is it 20 billion plus Barclays and FTSE index? So 40-50 billion is what you would also put it at?
Yeah, Latha. So the number as of now looks like close to about $23 billion basis this news. And of course, as Prasanna also rightly alluded to, if I include the other three indices, then that number could be tops another 25 billion. So we are talking about a cumulative 50 billion. But for now, I think it's just half of that. And I think that is definitely going to be a very, very big sentiment positive. no doubt about it. People will, worry about the other inclusions much later. But I think over 3.5 years of tapasya is finally yielding in the bond markets for a Brahmastra.
Oh, absolutely. And, you said that we can bother about the other good news later, but the trader will bother about it now because they take positions depending on anticipated flows. So, Prasanna, on that point, you said probably 7.05 or something now. I mean, it could go down and then maybe there will be selling on rallies. But can you tell us what is the general impact on the corporate sector itself? If Government of India borrows instead of 7.5 at 7.2 or 7.1, it is a general positive for all leveraged entities, wouldn't it be? I mean, I'm asking you this from an equity point of view.
Yeah, Latha, I think what I meant was it will probably open on a knee-jerk reaction at 705, 707 kind of levels. Whether it sustains or not depends upon how traders behave, the traders who have picked up positions in anticipation of these inclusion, and how the auction subscription happens today. But coming to your question on corporate bond, yes, it is a long-term positive for bond deals. And the fact that a steady flow, the important thing about a bond index inclusion is that this is passive money coming into the country, irrespective of what the macro factors of that country is. I think that is the important thing. That's why I keep stressing on the fact that from a long-term perspective, it is positive, because as the AUM of passive, AUM tracking this bond index keeps growing, we will get a 10% pie of that as well. So, but on the corporate bond side, the spreads are actually already quite low, Latha, frankly. So from that perspective, had the term premium and the corporate spread curve been a little bit more steeper, I would have given a much more bullish view to say that the spreads will come down and the term premium will come down. But with such a flat curve and with such a, spreads being such tight spreads, it's very difficult for it to compress a little bit more.
Okay. Lakshmi, there's another huge negative news that has come in the form of the US 10-year going to 4.5. Now, yesterday when we went from 4.23 to 4.33, Indian bonds stood pat. So some of the good news is there. But today, 4.5. So will that take away this positivity?
Yeah, so for the venom, there is an anti-venom, Latha. So, had this announcement not been there, the bond markets actually would have given up bulk of their gains, which actually happened towards the closure of markets yesterday. If you see, the bond yields closed about 5-6 basis lower. So I think you can't take away the positive impact psychologically. 5 to 6 basis points, gap down opening, some of those FOMO people moving in, etc. But yeah, bond yields in the US need to stabilize and show some degree of lower end. In fact, I've just got back last week from my Singapore and Middle East roadshows. The mood is positive, but yeah, macros and US have to support.
Okay, final question to you, Prasanna. Is there something positive for banks in this September 30 quarter itself? You all were punished a bit by the ICRR. So now, even bank EPSs could do well because of MTM gains?
So, like I said, Latha, let me speak from an overall system perspective rather than from anything to do with ICICI specifically. But I think, it's a long-term positive. It is not as if that the bond deals are going to crash immediately for the impact to show big time in this quarter itself. So the way to look at it is like how the way to look at it is to say that the counterfactual would have been higher for something equally negative if it were to happen in the market. So bond deals would have been maybe 725 or 730, considering oil and global bond deals at this level. But because of this positive announcement and because of the fact that this is a steady flow of funds that's going to happen over the next one-time flow, which is going to happen next year, and maybe some active flows happening this year, and then a steady flow of money as AUMs keep increasing in the global savings when it happens, that is going to be very positive. And when India over the next 2 to 3 years become a little bit more safe from a current account deficit perspective, I think all this will actually bode very, very well for India.
All right, Prasanna and Lakshmi, thanks a lot for joining in and explaining the entire thing to us. Passive inflows of $40 to $50 billion, rupee appreciation, it's all positives. Let's see how the street reacts today as well. We do have this overhang of negative global markets too, but let's see.